Welcome to this episode of FinTrail's FinCrime Spotlight, a mini digest covering current and topical financial crime issues. I'm Ciara and I'm joined today by Jess and Eoin. So it's actually Jess has prompted this week's topic following her LinkedIn post last week, which highlighted the FATF report on money laundering and terrorist financing risks in the arts and antiquities sector. Like we've seen many high-profile examples of how it's attracted criminals, organised crime groups, and terrorists exploiting the sector's history of privacy, use of third-party intermediaries to hide dirty money or finance terrorist financing operations. And whilst the report does highlight that many art market participants do not have a connection to illicit activities, there are risks associated with them. And we've seen that many jurisdictions necessarily do not have sufficient awareness and understanding of these risks. And I think we've seen that research has shown that illegal arts and antiquities trade makes up roughly 5% of the entire art industry, which is quite a large proportion of a multi-billion-dollar industry. So Jess, do you want to kick us off by talking through some of the risks that the report highlights?
Yeah, sure. It's a really interesting read, actually. It's quite long, but the executive summary is really, really good if anyone takes a look at it. It pulls out a whole load of risk factors that looks at the art, cultural antiquities market as a really attractive money laundering tool, but also to fund illicit activities as well. So the laundering, but also funding things like terrorism. And there are two types of risks that they really call out. One is the sort of direct and inherent risks of the market itself, but also the second is really around the investigative challenges, which make the market even more vulnerable and appealing than it already is just within itself. So a couple of quick examples. So risk of the market itself inherently. Objects can attract super high prices. So again, great to easily launder high values. There's a huge, as you just said, Ciara, a huge culture of privacy and discretion in terms of the identity of both the buyers and the sellers. So we've got loads of use of intermediaries, shell companies, you've got cash, fictitious sales, fake auctions, loads of stuff that makes it really appealing for laundering. There's also, in terms of the secondary market, makes it really appealing as well. So even further from the original source. So yeah, all complications there. And I'm sure we'll mention NFTs and digital art as well, brought out here. Online markets make it even more complicated. There's new opportunities here for purchasing and selling, more vulnerabilities, also some opportunities to make it less vulnerable as well to explore potentially. But also an interesting one is that there are really low suspicious transaction reports being filed as part of this market. So again, it makes it super appealing. But then on the investigative side, there's a real lack of prioritization on investigations in this area, which maybe we'll talk about later. Limited resources, limited awareness, limited expertise in how to actually investigate. And the thing that makes it really hard is that this is inherently global, cross-border, really hard to trace things and track. So it's a very complicated market with a lot of risks to it.
Yeah, you mentioned an interesting piece. Actually, you talk about suspicious activity reporting. Like we did a session a while back on the UK SAR report, and I think the volumes of that I had to look back on. If I recall correctly, it was in the hundreds of non-financial institutions with DNFPs. And I think that's sort of indicative of potentially, obviously, sort of the low scale potential illicit activity, but then also the awareness piece as well too, and how that translates in. So, Eoin, like I think the report has, if I'm right in saying Annex A, quite a lot of useful risk indicators, and I think they'd be quite helpful to do an overview of these for financial institutions looking at what they could be looking out for when it comes to the sector. Do you want to maybe give us that overview?
Sure, absolutely. And I think, like you said, regarding SAR reporting and everything, and for investigative purposes, it's a really good list of different risk indicators. But I guess some of the the big ticket ones would be, for example, use of shell companies, trusts, or third-party intermediaries. Also use of large denomination banknotes. Again, these are not maybe red flags that are super specific to the art industry, but in the context, it makes a lot of sense. Also looking at sale or purchases of items involving sellers who are not really concerned with getting their initial investment back. Sale or purchases of art vastly or routinely exceeding the expected sales value of the work. Imported or exported items not matching customs declarations, and also unique pieces allegedly related to existing archaeological collections but previously unstudied. So you're looking at really some things that are quite specific regarding the archaeology pieces, looking at some of the import-export stuff as well. But that, I guess, in the context of all the other red flags we mentioned, should really raise concerns for people working in the industry. But as Jess said, this is really complicated industry. It's not easy to identify these, but again, I would kind of urge people who are working in the area to look at that report, look at that annex. It gives really a good long list of red flags, and the report itself is great as well.
Yeah, and I think like sort of some of the traditional vehicles that they talked about for money laundering, like free ports, the area of focus of that. And I know like sort of that was sort of felt like quite a hot topic quite a few years ago, but it seems to sort of tapered off to some extent as well too. But sort of looking at sort of the global nature of the industry, I think it's quite important to be seeing how you can move sort of those funds around with the movement of the art as well too. So, Jess, like in your sort of post, you raised about the point that the sector doesn't often receive this scrutiny or attention that some of the risks may warrant. Do you want to maybe talk us through some of your thoughts on the focus of the industry on this?
Yeah, definitely. This is, again, a really complicated question and can get quite political. So I'll try to focus more on the practical side and not jump onto things like free ports and political focuses at the moment. We'll leave that out. But a couple of reasons why I think, more from a practical perspective, for governments, this is really difficult to deal with. It's, as we said, a global, complicated, cross-border issue. So it's just very difficult for individual governments to start to actually put controls and regulation and things in place to try and prevent this. And it's just easier to focus attentions elsewhere. Governments have got a whole host of other challenges to deal with. You've got economic crisis, etc. And it's much easier to put funding in other areas in terms of financial crime prevention, like fraud, than dealing with, maybe art markets and antiquities, especially when you're trying to sell it to your electorate. It's not necessarily appealing, and fraud is going to be a much easier to sell and much higher on the priorities list. But then in terms of actual financial services firms, why is it not a priority for them? Again, it's pretty complicated. There are lots of red flags that you can pick out from Annex A that Eoin was alluding to. But I think it's still, with those red flags, it's a difficult one to really pick out. And a lot of those flags can be applied to other types of financial crime. So whether or not they're picking those out for specifically art and antiquities or just wider financial crime prevention like terrorist financing and other things is a different story. But also some firms might not think that they are actually impacted by this. So they might think, well, hang on, my customer base is UK only. I've got a really simple prepaid card product with small values attached to it. Why am I going to be impacted by high value art laundering? But actually they might receive a small part of the proceeds of that, or they might be impacted in some way. So it's just really being able to look at that customer base and see whether or not you are impacted by it and have a think about the controls that you need to apply. Because if we don't look at it and we don't have this focus on it, there are lots of different social issues that fall off the back of this, like the loss of cultural artifacts across Syria and Iraq is having a big long-term impact, as well as funding of terrorism, really big impact. So lots and lots of other impacts that if we don't look at this, it is a really important issue and does need to be considered.
And I think those sort of that loss of cultural artifacts is a really important topic and area as well. And I think I seen a piece last week linked to sort of some of the New York art galleries and some of what's happening in Cambodia, for example. And I think it's an important area that it needs to receive probably a lot more attention. And on this, like Victoria, one of our colleagues, she wrote a really good article last year on the link between sort of like cultural racketeering, the role it can have in sanctions evasion and funding of organised crime. So, like, Eoin, do you want to maybe talk us through sort of some of the importance of that and what we're seeing, and also maybe like the increasing role of social media as well in facilitating this?
Absolutely. And yeah, shout out to Victoria for a really, really good article on this last year. And I think to pull out some of the kind of findings that she had, I mean, it's quite alarming really that the Antiquities Antiquities trafficking might constitute around 5% of the entire art industry. And as you mentioned, Ciara, it's, there's more to it than just that figure. That, it exploits vulnerable conflict zones. Effectively fuels war, enriches organized crime groups, and all the while destroying cultural property on top of that. So there's so many layers to this. It's really, really complex and really, really detrimental. Even in terms of just pure volume from this type of trafficking, UNESCO posits that this illicit flow of cultural goods is the third largest illicit flow in terms of volume after drugs and arms. So it's not something we should, be taking lightly. Like Jess mentioned as well, the looting of Syrian and Iraqi sites by ISIS on an industrial scale has, it's clearly linked to terrorist financing. Also, recent reports that Russian soldiers have stolen over 2,000 pieces of art from Mariupol, the port city in Ukraine. So this is something that's just growing, it seems, and it's not really going anywhere anytime soon. And as you mentioned with social media, it's really giving it a really big forum. And I think like Victoria called out, the kind of lack of regulation in this area for, say, forums, messaging boards, you're talking Skype, WhatsApp, eBay, Kik, all these places. It really gives people a place to just kind of shout about it, really, without really hiding it too much, which is worrying. And also, Facebook Marketplace has become really quite a central part of this too. There's lots of reports out there talking about how it's a significant risk for the sector, with the Athar project calling it a one-stop shop black market. So there's a lot of concern around that area. And I think, like Jess mentioned, even if you're a firm that might think you don't have that much exposure to it, you could be looking at lower value items being sold on these kind of areas, which is definitely worth keeping in mind and reviewing in line with all of your transaction monitoring, etc.
I think it could almost segue into a separate conversation as well, too, into the role of technology companies in money laundering and the responsibilities they have as well, too. But maybe that sort of affects a number of things outside of this as well. So a conversation for another day. I think also, like, we often think of art too being sort of in the physical form, and traditionally that's what it's been. But like, I think highlighting the role of digital art and the growth in that's been quite important. It's quite valuable, particularly linked to NFTs. Like, I think I read some stats say the market value around that reached 44 billion compared to 106 million in 2020. And I think some research done by Elliptic had highlighted that over 100 million of NFTs were publicly reported as stolen through scams in 2020. And what would that figure be, sort of, for those that probably haven't been necessarily publicly reported? And as I said, like, why we think of it traditionally through art dealers and auction houses or new NFT marketplaces, obviously virtual asset trading platforms as well, to sort of move this through. So it does expand beyond traditional financial institutions. And I think the report from also highlights sort of FATF had highlighted some market vulnerabilities specific to NFTs that are also people should be aware of and firms should be considering, and through the link into virtual assets as well too. So I think it's an area that they said they will continue to monitor, and probably through the work that they're doing on VASP as well, we'll see more of that coming out there too. But I think some of the examples they talked around, particularly like wash trading on NFTs, was quite sort of crucial. Some movement of funds sort of between wallets after sales and inflating the value of NFTs as well too, to facilitate movement of illicit funds. So another area of focus. So, like, Jess, and just before we wrap up, any final thoughts for firms on thinking the risk of this area and how to manage it, considering it can be such a diverse area, and the red flags are not always going to be unique either?
Yeah, sure. I mean, to wrap it up, I just want to give a sort of real practical steps that people can take, because if you look holistically at this problem, it can be complicated, and it almost becomes a little bit overwhelming as to how to play your very small part in trying to solve this. But if we take a step back, on a simple level, it's just using this report as an opportunity to have another look at your financial crime risk assessment, look at your customer base, look at your product type, look at your geographies, and assess whether or not you are exposed in any way to this type of crime. Is there any way that your customer base might be? Are you looking at some of those higher risk geographies? All of those kind of things. Consider whether or not you've got that exposure. And then on the back of that, take a look at Annex A that Eoin talked through and start to think, should I be implementing any of these to enhance the monitoring for it? So have I got the right controls in place? Should I maybe tune these to sort of include some of those Annex A points and make sure that you have covered any additional risks that you are exposed to?
Great. Brilliant, Jess. Thank you for that useful summary. So we'll draw to a close there. Jess and Eoin, thanks again for your time, and thanks to anyone who's been listening in. Cheers.